Why, hello, everybody. Welcome back. Happy Monday to another edition of Late Night on Chain. I am your friend, your host, the man with needing a haircut. Still, to this day, I have not gotten one. You know why? Because we are just in the trenches. In the trenches, we just can't sleep. It is no sleep season, baby. No sleep season. Everything's doing really well. Sentiment's really good. It all starts with the sentiment of the market, and it flows in. I don't even care about Bitcoin or Ethereum, but it seems that they're doing well. The activity's there. People like novelty and tokenized assets. That is the core driver this cycle. This first mover cycle is going to be on-chain equities, tokenized assets, real-world assets. I'm telling you, because it's the first time in a cycle that everything is coming on chain, and basically it's a new paradigm shift of how we handle these things, what we can do. It just starts with first, hey, you can buy a tokenized, stock or something, NVIDIA. That's step one. But man, the world is just, imagine all the sort of things you could probably do. People are going to start doing it. So I'm excited to have Julian from IXS on. We're going to talk to him, about a lot of these things because that is pretty much what they do. Basically, they're building the regulated AI agentic RWA settlement layer for tokenized RWAs. Fantastic. Let's talk about it. We're also going to have Rect on now. Rect is from Raisehood. And I think on Raisehood, it's if you want to do private sales for your asset, one way of capital formation is private round. You don't have to go to market and do a fair launch. That way you can do a private round. Raisehood is providing the infrastructure on Robinhood. So we're going to talk to Rect because he's built something amazing. Honestly, he really has. All right. So before we, dive in a little bit deeper and we're going to get Julian on, we have to make sure we show some love to our sponsors because that is the only way your boy can get a haircut and get paid through sponsors. So we want to give a shout out to EZA Kickstarter. They are the presenting sponsor for the month of what month is August. They provide a place for the best AI projects, tech builders to come on and build, especially on Solana. Solana's had the longest standing, basically theorized gambling culture, degen only, which is still fine, memes, but they're providing real infrastructure for real teams to build. Check out EZA Kickstarter. They're also having on Robinhood. Best builders in AI and tech are there. 3 more shout outs. We got to give a shout out to Banker. Banker provides agentic tooling on base for your agents to operate autonomously on their own wallets. They're just, obviously most people know Banker, but they do more than that. They also provide launch infrastructure for chains like Robinhood as well. Memes, AI projects, whatever it is, Banker's got you. 2 more, Buildify Win. They are an indie group who are building basically liquidity pools, a launch pad. Very difficult game to be in the launch pad game, but you know what? They're giving it a shot. I respect hustle. I respect builders. They're multi-chain. Check them out. And DTF Finance, they are actually in the RWA sector as well. They are liquidity providers. They understand treasury management. You need more than just volume. You need to be able to deploy this capital on different, opportunities, DeFi, to raise the stakes. That is what DTF Finance does. But with that out of the way, shout out to 136 people tuning in. We need at least 2,000. We bring up the one, the only, Julian from IXS. How are you doing today, sir?
I'm great. Thanks for having us on. Looking forward to it.
Yeah, it's been a while. I'm glad we can finally lock down,
Yes.
lock down. Talk to us about, what IXS does. Obviously you are positioning yourself in what I would say is the most important sector going forward. I'm very bullish on all things tokenized RWAs. Let's start from the beginning. What is IXS Finance?
Yeah. Thanks for having us, and welcome to our crew and all of the new community. It's great to meet everyone. Jumping straight in, we were one of the first groups focused on RWA many years ago. We saw that the crypto, from the ICO boom of 2017-18, and then which led to the very first RWAs, which used to be called security tokens. We thought that the convergence over time would be all the crypto exchanges adding, stable coins and then wanting to get into RWA. And then same from the other side, all the fintechs would add stable coins, crypto, and then get into RWA because real world asset tokenization universe is infinitely bigger than crypto because it's the real world assets and there's, all these trillions of dollars out there. Now, we did believe that RWA would give crypto a real use case, or at least one of the real use cases. That's now coming to fruition. This has also been a multi-year journey. But essentially, we saw that what would happen when TradFi and DeFi all wants to get into RWA? And what would happen is you'd need to build the licensed infrastructure layer that allowed for the legal compliant buying and selling, trading, loaning, borrowing of real-world asset tokens. And that's what we've built at IXS. So it's a fundamentally institutionally focused real-world asset platform. It has licenses. The original model we built a couple of years ago was the first real-world asset DEX. So essentially a Uniswap with securities licenses, because we envisaged a world where there'd be every millions and millions of tokenized assets. And just like in 2017, when there were millions of, 10,000s of tokens that couldn't get onto centralized exchanges for a million reasons, along came the DEXs and solved that. We wanted to solve that for RWA. But fast forward to today, I think the exciting part about the industry and the platform is the growth of institutionalized assets, treasuries, money market funds, fixed income, the incoming bull rush of BlackRock, Apollo, Franklin Templeton, and there's 40,000 other asset managers in the world that haven't started yet, but they're coming. And this real tangible adoption, you can see that from both all types of investors, and with the clear direction of travel that every platform in the world is trying to work out how to get into RWA now, and we've spent 5 years getting all the licenses and building all the kind of tech.
Yeah, so let's circle back on that, because the idea, and you've mentioned, the idea of RWAs hasn't just been created today, right? It's been around. People have thought about this for many, many years. I remember 2018. I come from the real estate background, and that was my thing. And real estate was one of the prime examples of trying to take this, on-chain RWAs. But back then, it was, as you say, legality. It just wasn't a security. It was so much. What do you think has changed between 2018, when this idea has been around, to now, where you're starting to see TradFi actually coming on chain? Do you think it's just time has, people like you have adopted the infrastructure to allow legislation to come in? Why do you think the shift has happened?
Yeah, it's a great question, and it's an important one. It's a combination of multiple things. First of all, it's time and it's maturation of the industry, much better products, much better issuers, many more, buy side plugins like Robinhood and Coinbase and all this other stuff. When you go back to the beginning of RWA, it was called security tokens, and it was 2018, and no one had a clue what was going on. People in crypto didn't want to touch security tokens because there was like a KYC element, even though a lot of investors were investing into equity of protocols as well as the tokens themselves. So all we were saying is, what about a tokenized equity? Would be, on-chain equity would be better than paper equity. But the struggle was real. Back years ago, the terminology was all different: security tokens, digital securities, et cetera, et cetera. The assets were generally all private assets. There were no publicly traded assets. There were no fixed income stocks, et cetera. So they were very, very hard to explain. Price discovery was not there. They were small assets, et cetera, et cetera. They weren't generally high quality assets. And what happened over the journey, because this was now 7 years or more or so, we got to a point, I would say in late 2024, more 2025, where because of the unique concept of stablecoins generating zero yield, the real first product market fit for RWA was ironically tokenized treasuries. And I say kind of ironically because for the previous 5 years, myself included, we were big proponents that blockchain and tokenization would help private markets the most. And I still think that has a lot of truth in it. But the reality was that people who held stable coins, they wanted assets that produce not only real yields, so not DeFi yields, like US dollar backed yields, like a treasury, but they also wanted it on chain, and they also wanted daily redemptions. So we actually found the first product market fit for RWA or for STOs was tokenized treasuries. And at the same time, it was the fifth round of rebranding. So the industry, and it was an industry thing, I don't think one single person did this. We dropped the term STOs and security tokens. We adopted RWA. That pissed a few people off because it's got different meanings already in TradFi, but that's way above my pay grade, whether you like or don't like the title. But we finally got to a point where people were even saying the same, calling it the same thing. And that might sound strange and silly almost, but my God, we've had thousands of discussions with people. You talk for weeks and months, and at the end, people are like, I don't really understand. Like, it's Ethereum, but it's got like, what's the type of Ethereum? And you're like, no, it's a real estate share, or it's a startup share, or, you know, all these things. You said you come from a real estate background, which I did as well. So, you know, so it's a combination of time. Regulations were important. I mean, Singapore, a couple of other jurisdictions were very early, positively sort of saying, look, it's securities, you know, RWA, if it's a security, just follow the existing rules. Like, securities laws don't reference paper. They don't say you own a piece of real estate share on a piece of paper, right? So if you've got to handle it, a token, an RWA, an STO, the same way, because it's all about who can buy, how you can buy, where you can buy, where you can trade. The token element of it doesn't require us to have new regulation rules. So smart jurisdictions, Bahamas, where IXS is licensed, Singapore and others, they just said, if it's regulated activity, just follow the existing rules. And if you want to use blockchain, great, that's cool and interesting, but you know, it's not that complicated, people. Now, other places did not do that, right? The US was one of the most important jurisdictions to do the complete opposite of that, right? The old SEC, the Biden administration, suing everyone. Coinbase lists as a publicly listed, approved crypto exchange, and a year and a half later, they get accused of selling illegal securities because, like, it was just one of obviously thousands of issues. But regulation found clarity in the US, which is one of the biggest market, of course, with the Genius Act last year, and now hopefully, fingers crossed, Clarity Act's coming. Although the SEC and the CFTC have already put out their rules, so it's kind of here already, and Wall Street has already started. So that's, I think we know the direction. But that was one of the key final big blockages. And then you had other markets like Hong Kong turned pro, Japan, Korea, and other places around the world. So, and because of that, you then started to have a dramatically improving quality of assets being tokenized. And that was a big one as well. Like, no matter what we tried to do before, it was tough because, you know, we are an infrastructure platform. We are not a fund manager, or we're not a treasuries company or a real estate company. We provide the infrastructure, any asset to be tokenized and bought and sold. So my point is, we can choose the best assets now, but when every asset is pretty average, that's it, right? We've got to work with what we've got. So years ago, the assets were very challenged. Now they've improved dramatically. But ultimately, you know, we've seen that, you know, again, I don't know if it's ironic, but we've seen that the real current drivers for assets is publicly traded assets, because of their quality and their liquidity. But also, you know, one thing that's important, when people, you know, there's a lot of talk about RWA, especially in America now. The reality is, if you look at US dollar stable coins, which were the original RWA, so real asset tokens, stable coins were called RWA because they were backed by dollars. Then you have real estate tokens or startup tokens. They're actually securities, so they're a slightly different format. But when you look at stablecoin adoption and usage, most of it's way outside the US, right? I think 80% of US dollar stablecoin transactions and activities in Asia, right? And if you look at, you know, a great platform like Ondo, who are the leaders, I would say, in tokenized stocks, all those buyers and sellers so far are not Americans, right? So it's a very interesting situation where essentially, I would say, and why is that? Because if you're American, you could get $1 and you can go buy a stock of Apple, right? If you're Indonesian or, you know, Vietnamese or, you know, Brazilian or something, often that's not the case. You can't even get a bank account, therefore you'll never get a stock. So getting your hands on a stable coin was much easier than a real US dollar, and buying a tokenized version of a stock, something you've never been able to do before. So whether it's, you know, and you can argue about the structures, but my point is it was accessibility. And so the drivers of RWA today, in my opinion, are not the main drivers tomorrow. So the history has been pretty much no America in this whole industry. And you look at the stablecoin use, again, US dollar stablecoins are the most benefit to non-US people who can't get stablecoin, like normal dollars and bank accounts. Of course, there's some use here, and that's starting to grow. But historically, it was all ex-USA. So it's very exciting times now. USA is obviously very, very pro. They want to be the home of kind of everything. That means now you're starting to see the very first RWA even being offered to Americans. But essentially, you can look at it and go, if you think America is the king of the market, they're on day one. So everything you've seen so far is being driven by foreign investment, if you will. And this is why it's a super exciting time, because we're just about to open the floodgates to, the biggest market on planet Earth by a country mile, which will then, also mean exponential growth in all the other parts of the world as well. But so, yeah, combination of a lot of things, a bit long-winded, but I think it's important for the listeners to sort of understand, why now and why has it taken so long in people's minds. Yeah.
No, I think it's a great answer. And I think it's regulatory clarity mattered a lot. I remember the 2020, 2021 cycle, there were companies going to Liechtenstein. I never even heard of Liechtenstein.
That's right.
And that was on the map because they were one of the jurisdictions that allowed the security token offerings, the STO. And now it makes sense. You drop the security, you have RWAs, and now obviously USA, pro blockchain, pro crypto, kind of starts the downfall there. Let me ask you a couple more questions because I find it very fascinating. Now, the agentic agent element part of the thing, obviously, in my opinion, again, two sectors, RWA is inevitable. Coming, TradFi meets blockchain crypto, but also the rise of agentic commerce, agentic agents, that's literally becoming commonplace. Now, one thing that you guys do offer or even state is you're the licensed yield layer for agentic finance. Can you elaborate what that means?
Yeah, so, we're big users of AI in our business. We're big, proponents of AI for, the world. Now, what came to my desk or came across maybe podcasts or something back earlier in the year was listening to some of the big CEOs of Maxis, of Anthropic and OpenAI, basically saying, of course, they're selling their own book, but like everything's going AI, and the future of business is agentic finance, and the future of products is priced in token usage. So not crypto token usage is what they meant in terms of compute cost to access a product. So I was like, wow, that's really, really interesting. I'm not going to fight that concept. I'm going to think about what that means to us. So when I started thinking about that, I look at the world and I look at all these amazing agentic plays coming out in the market, right? Agentic wallets, this and that. Now, the very first agentic finance platforms, if you will, or the ones that I saw, were basically crypto projects where they launch their own utility token ICO and they launch an agent, and then the agent's going to go out there and invest and divest only in DeFi. And then the activity of the agent will somehow be potentially reflected in the price of this utility token. But forgetting the token part of it, it was like people have started using agents to trade, right? Now, that is easy to do because a wallet can access DeFi without having to do any KYC, right? Well, that was the high level, right, of DeFi. But if you think about like what has happened over the course, if I could just high level summarize the last 5 to 10 years of crypto, it started very much in DeFi and it's come full tilt all the way across to regulated KYC licenses. And that's a combination of, in my opinion, one thing for the people that don't like what I just said. The one thing is, if you don't have regulations, everyone gets ripped off, right? There's how many bad actor crypto exchanges out there, market makers, etc. Like people have been destroyed. Even the ICO rug pulls, like just memes, rug pulls destroyed people. So the industry has ended up going all the way back to, regulated KYC, etc. And the reason I bring that up is because DeFi is cool, it's interesting, it's innovative, it's exciting, it's going to go forever. We're big proponents. But like a much bigger market is the real world. And so even all the big crypto maxis that have been yelling and screaming about this and that, self-custody and all this kind of stuff, which again, I'm open-minded to, and everyone can do whatever they want. My point is that the whole crypto industry has become regulated. That's where it's gone. And so it is what it is. Now, when you think about that and you think about how big DeFi was, and we all thought it was the biggest thing in the world, but it used to stand out here by itself. And in comes Wall Street, and now it's going to get 50 million times bigger. And you might not like that, but that's the reality. Like you might think, oh, we built this system that was anti, regulation, and here it is. But I'm not even debating that. I'm debating the size of the market. So I'm saying DeFi, great, add CeFi, bang. So then back to the agents. It's like, okay, so here we are now at the same moment for agentic finance, where it's like the agents instead of humans are buying into DeFi. What's the opportunity when the agents can buy into RWA and you build the infrastructure that allows agentic finance to access real asset tokens on, again, infrastructure that I have. So that's the big play for us. It's like we're not building agents ourselves. We're building real asset vaults that allow any agent to come and buy and sell and interact with RWA through our platform, again, behind or off the back of our regular infrastructure. It's a moonshot hit that I believe fully in. I don't have timelines on it because like everyone, we're all racing to adopt AI, use it, and all this crazy stuff's going on every day. But I think that is incredible. And I think that every investor ultimately will have multiple agents managing whatever they're going to be managing. If you're part of that, if you want to be part of that space, you want to get in. So this is the first agent vaults we're launching. We're doing it with a partnership with Prism and a stablecoin group out of Hong Kong called First Digital. Yeah, it's wild. I'm very, very excited by it. But of course, like it's the first one in the world. So we've got to like spread the love and get people out there, get people testing it. And like all things that are first, it's got some issues and we're ironing out the wrinkles. But yeah, I'm very, very excited by that. And let's see what happens.
It's extremely exciting. And I think it's innovative, it's pioneering. And I think that's obviously where the direction is heading. Where do you see, Julian? I know you don't have a time frame for things, you just let it be. But let's just imagine 1 year from now. 1 year from now, it's August 2027. Where do you see RWAs, agentic agents? You said agentic agents are going to invest on behalf. I agree with you. I actually had Coinbase on, and they said the same thing. That was one of the most bullish things. Everyone has their own AI advisor. But in terms of RWAs, where do you see TradFi and crypto heading? What do you, right now it's tokenized stocks. What do you imagine 1 year from now, what world looks like?
Yeah. So a few things, I think that higher yielding RWA assets are going to be highly sought after, and that might be something like private credit. So instead of 4% treasuries, you're getting 8 or 12%. The liquidity around those assets needs to be solved, and I think it can be with liquidity pools, which is something we already have. But essentially 4, 6, 8, 10, 12% daily redemption, institutional quality US dollar yielding products, I think are going to be a huge winner as we move forward. That being said, historically, as in up until very recently, the almost 100% of stablecoin holders that were investing into RWA were professional investors, and that they wanted that yield from the real world. And often when DeFi has a meltdown like we had over the last 6 or 12 months, and it's bear market number 4 or whatever it is, there is no yields in DeFi. So then they want somewhere to park. They're not going to take those dollars and go back into cash. They're staying in stable coins. They want to yield. They want daily redemption. If the market flips a switch, they want to be out of that straight away. So that's why those assets have worked a lot. But in the background, you said real estate. Like we started at real estate because of this sanctioning of the industry from this positive acceptance and direction where the US has gone. All the private assets are coming back now. Like we get 5 or 10 different inquiries every single day about power centers and equity for this and all kinds of different parts of the world and commodities and gold mines and all kinds of stuff. So it's reigniting. But the one thing that, as you said, looking at a year down the line, you must have a targeted, designated stablecoin investor pool group when you're launching an asset, right? That's the number one key, right? And they're building, and we're building that with partnerships with fintechs and sexes and dexes. But like you need that's the key for issuers. Like everyone who always wants to tokenize their asset and put their hand out for $50 million because they think they've got a great asset, that is like so far away from what you need to be thinking about. It needs to be like, which asset do I even have redemptions and liquidity? Like who would be this appealing to, and why is this asset even worth investing in the first place? And let me then build this consortium around launching a vault, which is now our new architecture that we're all talking about that we mentioned before, and making these vaults scalable and with some capital in the beginning. And that's the hardest part, right? It's like finding a good product and having some initial capital. So looking out 12 months, I see a lot more yield products coming. I see a lot of a lot more buy side, right? Because now if you're a fintech and you're a bank, so what's interesting is Robinhood and Coinbase are the two big dogs, in the ring right now, and maybe forever. They're insanely good businesses. They've got it all going on. They're both playing the everything app. Now, people think that they're the only guys in town, and it couldn't be further from the truth, because as amazing as they are, there are 150 million users, or there's 9 billion people out in the universe, is still not there, right? So what I feel what will happen in 12 months' time, which we're starting to see now, and what we've been pushing for years, is if you're in a fintech business or you're a platform play, you basically want 4 or 5 things. You want more sales. You want to add more assets. You basically should want to do it legally. And you want to transfer way to make money. And you don't want to, but the reality is you need, in the RWA space, tech, licenses, assets, all the fun stuff. So I think that what we'll see is, and that all these guys are adopting stable coins, because everyone's thinking, well, if the whole cash on my fintech platform went from millions and millions and tens of millions of dollars of cash that I don't get anything from, if it was in stable coins, and then I was working with like IXS and putting that into all these yield products, and I'm making commissions, but it's very healthy for all my users because they don't care like what the users are doing as long as they're making money, then you start to see like all these fintechs, they don't want to send their users anywhere else either. They all want to keep them on the platform, just like a bank does. So there will not be mad consolidation around the world from today, in my opinion. There'll be a little bit. There'll still be thousands of fintechs and platforms and payment platforms and all this. They'll all add stable coins. They'll all want DeFi and real world asset yield. So I think that the opportunity in a year's time is 10 to 100 times bigger than it is today, because that'll be 12 more months of teams getting involved, understanding what they want, getting stuff launched, all the integrations, and then getting out there and saying, who doesn't want to make more money? Because that just hasn't been a concept. If you're a fintech platform and people have millions of dollars of US dollars in their accounts, generally sits around not doing too much. And now you've got new products like, I think it's USDG, which is basically a white label stablecoin product.
Robinhood. Robinhood.
So they've adopted it because that stablecoin gives 70-80% of the return of the stablecoin to the platform. So they're trying to compete against USDT and USDC. So, there's this whole new world of stablecoin, better metrics for platforms to integrate. And now there's also a whole new world of non-US dollar stablecoins coming out for the first time ever as well, which is very exciting.
Yeah, I mean, and all this is possible from the regulatory clarity, because without that, you can't then, these big funds can't go in. So I think IXS is prime position for probably the most best opportunity of our lives. Like I said, I'm tripling down on this sector. I believe very wholeheartedly that real world assets is the play to be. Julian, my friend, any last word you have for the over 2,600 people tuning in live late night on chain?
Oh, wow. Awesome. Thank you for your time. I know you're all busy. I hope that helped. We'd love for you to join our community. Our community should 100% sign up and follow Late Night on Chain. I thought it was a great conversation. We'd love to come back anytime, and reach out if you got any questions about RWA. Thank you.
Julian, I could have probably talked to you for like an hour and a half. Literally, I could have just had a chat. I mean, this is fascinating stuff. No, we absolutely will do it again. Like I said, anytime you want to come on, the invitation, open invite, anytime.
Thank you. Appreciate it. Thanks.
We're gonna make sure we're gonna have our team's gonna make 3 clips from the show. We'll share it with you. We'll add you on LinkedIn, all that good stuff. Enjoy the rest of your day, Julian.
Thank you.
All right.
Cheers.
That is Julian from IXS. Like I said, we bring on the teams that just understand this sector, and I've said it many, many times. Do not fade this industry, this sector specifically. RWAs, all things tokenization, every single chain, every single I guess the big timers, Coinbase, Robinhood, they're all going for it. Binance. I've only spoken to the Coinbase and Robinhood people, but they're all coming. And teams like IXS are the pick and shovels play, providing the infrastructure. It just makes a lot of sense. Think about it. Once regulatory clarity is passed and it's going that way, now all these pension funds, all these players with significant capital are going to come on chain for the yield bearing opportunities. Companies like IXS are going to absolutely crush it, in my opinion. Again, nothing I say is financial advice. I'm just very, very interested in all things RWA. So we thank Julian from his time. All right. Next up, though, we got the one, the only Rekt. Now, when it comes to crowdfunding, that's important too, because we're going to have more builders coming on chain. And Rekt has created something called Raisehood, which allows people to raise capital for their projects. Rex, how you doing today, sir?
Hello, hello. Thank you for having me.
Yes, my friend. First of all, let me show you some love with this banner because you created some dope infra. Talk to us, man. For those that might not know, what exactly is Raisehood?
So, Raisehood is basically my vision of a community raise pad. I've had my fair share of raises on different pads, and they all were successful. And I've learned a lesson or two from being on them, and I always wanted to like build my own vision of it. So in a way that I could actually customize it the way I want. And that's how the idea came out about to be. So yeah, Raisewood is basically a community raise pad where projects come and raise funds for their token. And yeah, that's basically the idea. And the only thing that I see different is that the way it customizes each launch specifically for the project itself.
Yeah, I think the customization aspect is extremely important because you can tailor it exactly to the needs of the users. Let me ask you this. Why is it, and again, this is a very normie friendly show. Obviously, we know the answer, but not everybody is as crypto savvy. Why would someone want to not launch on like a pawns, for instance? What's the advantages of using a project like Raisehood versus, say, a Pawns or a Banker or one of those typical launch pads?
It depends on the project structure and the project needs. So if you are running a project, not every project would work on Pawns, for example, because on Pawns you have a specific parameters set, and then you launch, and most of the supply is in circulation, and it's a way of, let's say, fair launch for the entire public. But with Razehood, it's customized specifically for the project, because some projects would want a specific allocation for let's say staking, or they have different needs for whatever like DeFi structure they're using. So we try to tailor the launch in a way that it would succeed, and it would be a win-win, and it would be customized for specifically for the project itself. So because different projects have different needs as well. So we take that into consideration.
Yeah, no, I think it's great. And I think it's important people understand that, like, as you said, not everyone benefits from a traditional fair launch, especially the component if you need supply control. And let's take a look actually is on your site, because I think it's nice to see. Let's share some screen. Raisehood, the launch where the stocks trade, the raise pad for Robinhood chain, fixed price raises paired with ETH, USDG, or Robinhood stock tokens, permanently locked liquidity, no rugs, so you can fund stuff and sleep at night. I think it's important for people to understand that, like, if you want supply control, if you want to have a treasury, you can't do that on a fair launch. You're not reserving anything. Maybe you could do a team buy, but then you have the bundle and the cluster, and you're still paying for it. So I think like it depends on everyone's situation. I think one of the best aspects of a fundraise is you have capital now to deploy at different times. And I think that's a huge advantage for the right team, of course. The wrong team, well, that's the risk. But for the right team, having treasury matters, and you can never build that treasury from just a fair launch project because fees typically go down. Why do you think building on Robinhood made the most sense to you? You could have done this on any change. You chose Robinhood. Why?
Mainly because the stock aspect of it. Because with this pad, you can also raise in stock tokens and pair your token to stock tokens. So that gave us a whole new dimension to use. Although the current raises were in ETH, we still support stock tokens, and encourage whoever is applying to go with the stock tokens because it have a very, very interesting dynamics, especially when it's paired to your token. And yeah,
What can people
that's
do? What can people do with the stock tokens?
There's a lot of things that you can do with that, but like let's say a basic idea would be that if you are building something on top of on a platform that has a livestock trading, you could pair your project to the stock because it makes more sense than pairing it with ETH or pairing it with Bitcoin because you're directly correlated to the project that you're building on top. So this gives it another dynamic, and with the dividends that they release for with the holders, I'm not sure how often they do that, but there is dividends that comes from the stock tokens to the holders, the users basically. So that could also be leveraged against and then used in some way to reward the users.
Interesting. Yeah, I mean, like I said, we had Julian from IXS. We've had a lot of people, obviously, in the RWA sector come in. Every chain you start seeing everyone building in this sector. It makes a lot of sense. What do you see is building? So, as a builder, one of the things we like to talk about is difficulties and challenges that may have come across. For you personally, as an entrepreneur, what has been the biggest struggle you found getting Raisehood off the ground? Is it getting more people aware of it? Is it getting better quality launches? What has been an obstacle for you so far?
Honestly, an obstacle, I would say, in terms of eyes, I think we have decent attention because even the first launch where we weren't expecting this, but it filled up in less than a minute. Like people were refreshing and it was sold out. So that is great. But what is challenging is, I would say, what comes after the raise, because once you customize the raise, you fix a whitelist and everything's set, everything looks good. But what comes after it is when, let's say, it starts trading, and you never know where the market leads or takes the project, and it could be none of anyone's, like, let's say, I don't want to say fault, but none of anyone's intentions that the market could drag you this way, but the market is the market. So we're trying to find ways to like mitigate that and find ways to actually support projects long term. That's why we have also treasury. That's where our all the fees that we get stored. We never use them. And those are intended to support the projects that launched already on the pad.
Absolutely. No, I think, what do you think is, because obviously with raises, you do tend to have a lot of sell pressure initially. There's people who just come in the raise who want to make a quick 2x and leave, and that's fine. If you were developing or designing the perfect launch, say your project, say you're going to design a, I don't know, a private round, say for Raisehood, for instance, I don't know, and you wanted the best outcome for both, treasury for raising, but also, allowing participants in it, because obviously if you go like too long of a lock, like a year, like no one's going to join. How would you design, in your opinion, the best scenario?
That's a hard one because we try to change every single raise. We change the customizations for it. So at that time we thought it would be the best, but thinking of it, I would just say if someone wants to raise, it would be mostly ideal that they have it's like the supply control within the trusted parties around them. So if you do a whitelist, for example, make sure that you have specific people, not just anyone, because you don't want to invite any random person you don't trust, and then they would just sell or dump all the bag, and then suddenly cause a red candle. You want people to hold, people with conviction. So real believers. So I would say that a perfect launch would be where a project actually studied this aspect really hard, which is whitelisting, and then making sure that there's enough that goes to the public so it can be fair. in a way that everybody's satisfied, and nobody would want to sell on launch, because most of the launches open up on an increase in price. So obviously people would want to take profits, but if they have diamond hands, I'm pretty certain that things would fly. Yeah.
Dude, it's insane. What did I tell you? I told you, a couple days before Elnock, I was like, bro, if you get a token, I'm max aping. Like, it just what you have created is key infra on Robinhood, because again, the Launchpad game's tough. Obviously, shout out to Pawns, shout out to Ozzy. I've had them on. I've had, and he's crushing it. But that setup is not for everybody. That setup wouldn't make sense for Elnock. That setup doesn't, if you're thinking about it from a institutional corporate tile, you need a treasury. You can't just like hope and rely that it's going to be low and deployed capital. Like, where's the capital coming from? And so I think serious teams will need an option like Raisehood to allow themselves the right raise, because they might have a distribution network. They might have people. You just need that funding mechanism. You make it seamlessly. So I absolutely will. What's next for you, Rect? What's next for you? The Launchpad works flawlessly. You have projects probably like wanting to get in. What's the focus next for Raisehood? The next 2 to 3 months?
I think the focus now is I'm looking at the projects that apply. Obviously, anyone can apply through apply.raisehood.xyz, but we were taking the curation very, very carefully now, making sure that we vet the projects that are coming, because there's a big number of them. You need to make sure that projects that are coming that are actually legit and have the intentions of good intentions of proceeding with this in a decent manner. So it's mainly vetting now, and we do have version 3. So currently we're running on version 2. The first raise was on version 1, and then we immediately saw some things that we needed to change. We released V2 directly, and V3 is finalized as well now. So you might be seeing some new additions to the race pad, maybe some hooks that we were gonna install. So yeah, interesting things are gonna be coming.
I'm excited for you, man. I'm excited for you. I'm excited for the future of Raisehood. I think, like I said, infra on Robinhood just makes a lot of sense. One of the things with Elnock is we're creating the infrastructure for creators to monetize their brands. And I think I'm excited to build what I'm building. I'm excited to see you build. Any last words, brother, for the 3,300 people tuning in live late night on chain with Rect from Raisehood?
I wish everybody a good night or a good morning wherever you are, and just maybe tune into our X, have a look at the page, check the website, and I wish everybody have a good day.
Absolutely, man. And like I said, you need anything from me, you know where to find me. Shoot me a message. I appreciate you. I think you're great. And we'll make sure we have a couple clips from the stream and we'll blast it out and tag you, brother.
Sounds good. Sounds good.
All right, my man. Enjoy the rest of your day.
All right. Ciao, ciao.
All right. That is Rect from Raisehood. I can't say enough good things about this guy. This guy's top notch, S tier dev, and an amazing platform. Seamless, no issues whatsoever. It is awesome. And I think if you are somebody serious about raising money in this environment, you don't want to go the traditional route of fair launch deploying on one of the other platforms, which are great, by the way, but it's a different use case, then highly recommend. Actually, you have no other choices, really. Raisehood is the leader when it comes to private formation, capital formation, pre-sales. There's no other better one, hands down. Hit up Rect, hit up me. I'll introduce you to Rect. Great guy, fantastic platform. All right, guys, appreciate each and every one of you. We are out. Market's booming. Everything's great. We're on Monday through Thursday, noon PST. Back at it tomorrow because that is what we do. Maybe I'll get a haircut, but probably not. See you guys.